Alright, guys, my name is Abe Forest from Lagos, Nigeria. Today being 12th April 2026. I'm simply sharing my thoughts about the market. It's no news that we have a war that is ravaging Israel, Iran, and US, and that has an effect on the market, especially the stock market and the commodity market. And when I mean commodity market, I'm referring to the oil and energy per se, and I'm referring to gold. Now, if we look at, let's start with the commodity market, which I'm going to be using gold as a case study. Let's start with oil. Now, ever since when the war has started, there has been a rise in price of energy, especially oil. So it has actually gone from $65 per barrel up to $119 before it dropped. But now due to the agreement between the US and the Iran, the market has actually dropped up to $94 per barrel. So as a result of this high price in oil, which has actually caused inflation in global economies, we find out that every stocks are beginning to come down because of rising cost of energy. Because the Middle East can't supply, there's short in supply of oil due to the Strait of Hormuz that has been locked by the Iran government. Every Gulf country is very close to the Middle East can't actually supply oil because we do know that 20% of oil supply comes from the Middle East, and because of the Iran war, there has been a reduction in supply of oil. So that has an effect on on global economies, because the oil prices begin to increase, as the case may be. Now, when we look at the effect on other commodities, which is gold. Now, everybody knows that gold likes to thrive when there's chaos, when there is uncertainty as far as global economy is concerned. And in my previous video, I talked about what happened when gold was rallying up to the top. So many countries, the Middle East, China, India, Poland, majority of these countries are buying gold because of the dollarization. They want to reduce the over reliance on dollar. Because of this, majority of all these countries has global reserve in America in form of bonds, and it has to come in dollars, and they have to pay in dollars, and there's this reliance on dollars, because people have to get dollar all the time. So that has actually caused a kind of problem in other economies. So because of this, every country of the world, not just every country of the world, the major countries like China and India and some other part of the Middle East, and let me just say Asia, decide to purchase gold as their natural as their reserve. And lately now they've turned to silver, because silver prices are low compared to gold. When you look at gold is pricing above 5,000. I think 5,598. That's the all-time high that gold has created in 2026. But because of the shock in oil prices, it has actually declined up until 3,998 per barrel. So I think 3,998 per barrel. So since when the oil shock, the price begins to go up higher. So because of this supply, they limited in supply of oil, which is the major what do you call it now, income source for all this Middle East. So in order to meet the contingencies in their country, they have to sell off gold. Don't forget that they've acquired too much of gold, not just too much, because they want to de-dollarize. They don't want to over rely on dollar, so they decide to buy gold. Even central banks of other countries decide to start buying gold so that they can reduce the over reliance on dollar. But when this oil shock happens, and they can't be able to supply oils to the nations all over the world, they decide to sell gold in order to meet their contingencies. They sell gold, and that is the reason why you see that gold has crashed down up onto this level. And this inflation, or the high rise in major cost of of energy, which is oil, has actually has effect. Okay, I was trying to talk about silver now, because silver now has a kind of reduced price. People, countries all over the world begin to purchase silver too. Number one, silver is they serve as a reserve and also serve as an industrial mechanism. Those that want to, especially the Chinese, all the chips that is being produced. Majority of all the stuff that are being produced, like phones, laptops, and some other stuff like that, they need silver to produce them. So silver is serving two purposes: as a reserve, and at the same time serving as an industrial mechanism, in this country. So demand for silver too has risen, as the case may be. If you look at it, I think silver too has actually gone up by I think how many percent now? Come down. Okay, let me see this. Since the beginning of 2026, silver too has actually gone up onto, I think, more than 45%. And now that there's this oil shock, silver has actually reduced drastically. I think silver now is I think 43% high in 2026. So when the energy shock begins, then it has actually come down. It has dropped up onto I think it has dropped down 49%, as the case may be. So that's as a result of the oil shock. Now, having spoken about commodities, let's now go to stocks. Now, when you look at the stocks in America, let me look at the indices, because that is going to categorize all the stocks in America. I can actually go on and on to pick them individually, like the Nvidia, the Tesla, the Amazon, the Microsoft, the Google and Apple and the rest. But I'm not going to be doing that. I'm going to let's use S&P 500, which is the top 500 companies in America, and which it involves the Magnificent Seven of tech companies, the 100 tech companies in America, which is involving the Nvidia, Tesla, and the rest. So S&P 500 is the top 500 companies in America, including the tech companies. Now, you'll notice that since the oil shock, the rise in oil prices, it has actually reduced. Stocks has actually dropped. I think 42%. Let me see. Yeah, sorry about this. So S&P 500 has dropped 42%. Let me delete this and draw it from the beginning. Let's see, so we can get an accurate figure. Oh, sorry, it has dropped 6%. No, I think it dropped further. It dropped 9.7%. Let's just say approximately 10%. But when the Iran government and the American government decided to cease fire, we had a jump from this point The market has actually come up from this point up to this point. I think it has jumped back 8% now, 8.35%. So although we are still expecting a further move to the upside, but we are expecting this gap to be closed before the market starts going up higher, as the case may be. So now S&P 500, I already told you what S&P 500 is all about. Now let's check Nasdaq. Nasdaq is the top 100 tech companies, including Magnificent Seven, the likes of the Apple, the likes of Nvidia, Tesla, and the rest. Amazon, Microsoft, Google, and Facebook, which is Meta. So that is the top 100 tech companies in America. That too dropped 7.60%. No, I think it dropped further when the war got more escalated in the Middle East. So I'm coming. Maybe I should delete this. So it dropped 12%, 12.6%, approximately 13%. So, and when there was a meeting for a ceasefire, so we had a recovery of how many percent now? Back to the upside. I think the markets recovered 10% back to the upside. So although we are still expecting a bullish run, but then we want this gap to be closed before the market can either close this gap before they move to the upside, or move to the upside and come back to close this gap. So as the case may be. So that is for the 100 tech companies in America. Then the Dow Jones, which is the Wall Street, the 30 companies in Wall Street, so actually had an effect. These are the three major indices in the American soil. These are we can't start analyzing all the stocks in America, but at least these are the major stocks in America that can actually give us an economic indications of what the stocks in America are doing at the moment. So now with the Dow Jones, which is the Wall Street stock market, dropped 10.7%. That's approximately 11% since the beginning of the war, and now there is a surge, a rally up to the upside of how many percent now? Of I think just 4.5%. So though we are still expecting a bullish run, but because of the war, we don't know what's going to happen. There's one thing about the market, nothing is certain anyway. We need to be open-minded to what the market is saying. But looking at this market technically, from my own technical analysis standpoint, we are expecting a bull run, because this trend line has been crossed. This market has crossed this trend line and actually broken, and we have a breakout, and now this market is coming back for a retest. And once the retest is done, then we should be expecting a move to the upside. That's provided the war, though they had a meeting today, but the meeting was not successful because they didn't actually reach an agreement. So we are still expecting, probably, one thing about the market, there's uncertainty. Nothing is guaranteed as far as fundamental analysis is concerned, but when you look at it technically, this move to the upside is inevitable. Like, nothing is going to stop it if you are looking at it technically. But fundamentally, don't forget, in the trading world, we need to understand that there's fundamental analysis, there's technical analysis, and there's what sentiment analysis, which I'm going to be delving into in my next video. Okay, I think the last one, which is the VIX. Okay, let's look at DXY. DXY is the dollar index. This shows the strength of the dollar as against the other basket of indices like the GBP, the JPY, the CHF, the NZD, and the Euro, and I think against other major currencies. So looking at this now, I think dollar is being strengthened, as the case maybe, if you look at this, because you find out that this, though, since the war started, dollar has actually moved up higher from this point, up onto this point. Dollar has moved like 5% higher, which is very, very good for the American government, because people demand for more currency, which is dollar, and that helps their economy. And I'm still going to be explaining some economic metrics, in America, as the case may be. Some of the stuff that some metric we need to look out for before we make decisions in the market, and that is what the DXY is all about. But when there's a de-escalation of the war in Iran, you find out that there's a reaction back to the downside that actually affected dollar to come down a little bit. So that is what the dollar index is all about. It measures the strength of dollar as against other currencies. So then let's look at VIX. Now, if you look at VIX very carefully, VIX is just like an index that is used to measure the 500, the US 500, which is called SP 500, the top 500 companies in America. So it moves in an inverse relationship. If the SPS 500 is moving up higher, the VIX has to move down. Then using DXY as a case study, when the DXY is moving down or moving up, the commodities, which is gold and oil, or let me just say silver, they move in opposite directions, inverse relationship, as the case may be. But as far as the DXY, the VIX is concerned, is used to measure the XP 500, which is the top 500 companies in America, as the case may be. So you notice that now that the SP 500 is moving up higher, then the VIX is moving down. Can you see? So they move in opposite direction. I think that is going to be the end for this episode. And probably in other videos I'm going to be explaining, deeper in what do you call it now, in all these economic metrics that we need to look out for in the American government before we decide to press either buy or sell. I'm going to see you guys in another episode. All right, thank you. Bye bye.